Hello guys, right, good afternoon. That's what it is here in the UK anyway. I've just got back from doing my chores. I'm back a bit earlier than normal, and I had a quick look at what potential charts are overextended, as it were. New Zealand dollar seems to have been very strong today, so we've got a today's ADR so far is 114.30, and we're at 87.10 for the 5 days, so that is overextended. We can clearly see a big move up here. We're at R2, and we've got a couple of other pairs. One was at R3, not New Zealand dollar US dollar. That still hasn't quite, no it has, it just touched R2, and must have been New Zealand dollar Swissy was just up here approaching R3 up the top there. So, and with 84 as per 56, so quite extended. Now, in order to consider taking this short, all I need to do now is just start drawing my levels. So we're looking at H1 at the moment. Might as well just check what's going on the daily. Yeah, we're testing these levels here, and testing the support here, and potentially support and support there. So quite a lot ahead of us. Let's draw one or two of those in. That's support. Oh, and my mouse has decided to play up. Hang on, let's try again. No, bear with. Oh, don't do this to me. What are you doing? Right, let's see whether I can get that dragged on there now. There, support is being attacked almost to the pip there. Got a support there. So test and retest, old support being tested as new resistance. They have been tested here and here. Let's have a look what we got in resistance wise. Resistance, well, we're testing this one, not quite tested this. So there's enough information on there to suggest to me that we may well have a potential reversal position. H4. So I hope this just identifies or points out that it isn't just the ADR we look into, we also see where price is in relation to other support and resistance levels. And then all I really need to do is just start drawing my support levels. If the H1 reverses, we'd expect to close below here, and then potentially a little pullback and a continuation. I'd want to see this, if I was going to consider shorting it, to have closed red and the next one to be red. Obviously the next one will be potential to turn red, green, whatever. On M30, then I want to be drawing my level as well. So M30 reverses, potential pullback that way, and continuation. Once again, M30 would need to be closed red and turning red with any potential entry. M15 is there, and that's that candle there, low, high, high, low, high, high. So this looks like it's potentially going to close in 6 minutes to the downside. I wouldn't want to consider shorting this because it'd be smack into a level that's been tested already. So what I want is small candles up here and then a big candle there, in order to have room to use the M30 low, that's that one there, as a target. The target's already been hit, so I'd want to, before I could consider shorting this, I'd want to see the M30 close below and then target the H1 low here. Hope that makes sense. Meanwhile, this could all reverse up again and we could have a new M30 penultimate candle if it goes on to attack that R3 up there. I hope that makes sense as well. I talk about this a lot. So all these are fluid. I'm not really interested in trading at the moment. I'm making an assessment of what's above us, what's causing a problem. Remember those daily supports, they're still way above us, so they haven't been tested as resistance. So there's no reason really to expect this to return, or reverse rather. And that's it. That is my plan. So if we go down to M5, now we can see the trend starting to form here. The M30 is what we consider to be a sort of M5 trend. High, low, well, high, low, lower high, lower low, pullback, continuation. But remember, I talk about the break of the M30 close below the M30 low to be the potential swing 3. So if we look at the M1, the M15 low is there. It's not been closed through yet. Still got 4.5 minutes to go. But if it were closed below, this would be swing 1, 2, 3. Doesn't matter whether there's 5 swings here. 3 is there, pullback is 4, 5 is a continuation. As I said just now, this isn't really, that would be the M5 low there, I expect. We didn't put that one on. Stick it on there. There's the M5. There. Go back to M1. And there's the M5 low, which I just said was there. Swing 1, 2, 3. Where did M5 close? M5. So in the opposite direction, or it's the opposite of the 5 or 6 swings before the 3, we could easily have just 1 swing before the 3. Doesn't matter. So swing 1 and it's closed. So we still count that as 3. This is 4 and that's 5. Hopefully that makes sense. The 5 is our trade. Swing 1, 2, 3 is the close. Swing 4 is the pullback accumulation, the point where they will probably get you in a short trade and then reverse on you because it hasn't closed, or it's reversed on its own. Notice here it didn't reverse on the 1 minute. It would have had to have come up here, closed, then potentially popped back down, continued back up, and we'd be looking at a long instead of a potential short. So as you can see now, this is attacking that H1 level, and we didn't get an option to get into this trade short. Effectively it's gone without us. That's all there is to it. But saying that, it's not gone anywhere really. It's coming back to test this old resistance level here as potential support. Double check what we're looking at, make sure we haven't missed any. No, there's nothing else. The last resistance broken is the level it's likely to come back and test. This could easily just be pushed down, touch that hourly ATMA, and then potentially reverse up again. So in this instance, this is my trade plan. Nothing is over till the fat lady sings, as they say, and then you could go off and see if you can find a better example with drawing all the lines on New Zealand dollar US dollar or New Zealand dollar Japanese yen. All of them are overextended, as it were, at the moment to the upside. Doesn't mean they have to turn around. They might not turn around at all, because being Asian pairs, they might just decide to push this up and up and up and up into the Asian session and then reverse it in the Asian session. So that's how I assess my charts. Move that out of the way for the moment. Stick a low on that candle there on the H1. That is my starting point. If it closes down below, as I've just said, and so on and so forth. It's always safest to wait for an H1 reversal, but if the gaps are right, which they weren't on this Swissy, to take a short, but if they're right on one of the others because of a more volatile move to the long side, then there are possibilities for 1 minute reversals and trades, but hopefully that makes sense to you guys. If this high in the next hour, whatever that is, in 15 minutes time, if this reverses and goes up, you delete this one and move it up to the next candle's low. Well, in fact, it's that one's low there, you just move it up to the low there. Okay, that's how it works. So just it forces discipline, in my opinion. These are the best, safest, most stress-free, relaxed trades out there. I think just wait for a big move and then just wait for the reversal. Don't take chances, don't break the rules. If you can't get in, as I said with this New Zealand dollar Swissy, because there's no gaps, then so be it. You know, you have to develop your own preferences and risk assessments, as it were. You know, but if you do this long enough, and again, just a reminder, don't expect to do this in 6 months. Give it 2 years. Don't change between systems and methods, because you can't, you know, you make mistakes with this one. I probably wasted 2 years doing that. Stick with something you like. Doesn't matter what system you use, this RSI would massively help you, I think, if you use pivot point trading, Fibonacci trading. I haven't tried it with Bollinger Bands, but I imagine it would be brilliant with Bollinger Bands as well. You know, it's just, I think it's just a slight step above using the squiggly RSI lines, because these are so precise. Okay, thanks for watching, have a good day.